And so how to record the flow of material costs in process costing? Relatively simple if you remember your financial accounting, right? We debit our raw materials inventory, credit our accounts payable for what we paid on based on credit. Then as our work in process goes into our different, we start our work in process for roasting and blending, we'll credit our raw materials inventory. So we're just saying, hey, we're using $381,000 of goods. Remember, these are dollars now when we're doing journal entries, and we transfer them to these departments. 279,000 went to roasting, 102,000 went to blending. It's still, all this is inventory, so it's a normal debit balance. So debit increases, credit decreases. But in effect, nothing changes. Inventory just moving one hand to the other within the company. And then for factory overhead, they record indirect materials. So if it was coffee beans, I'm not sure what we would do with coffee beans, but maybe they're saying the packaging would be indirect material. Maybe it's so cheap. So the raw material inventory you'd credit and you'd debit it to factory overhead, because factory overhead is for that those immaterial, indirect materials that we can't really see, or maybe that's oil for the machine used that makes the coffee. Who knows? A lot of the most common and easy example is if you're building equipment like screws and bolts and things